It's a market which is giving you these moves. How much of that is actually tradable, and what do you make of this, I guess, is the big question. To help us do that, Sarvendra Srivastava, technical strategist at Emkay Global, joins me right here in the studios. Sarvendra, afternoon. Welcome to the show.
Good afternoon.
So, yesterday we were struggling to get a 5-point move on the Nifty. Today you got a big 90-point move. What do you make of it?
Absolutely. We are right now placed at a very long-term trend support, and we have sought that support. But as long as we are not decisively breaking below that, such kind of sharp bounce backs are definitely possible, and that is what we are seeing today. And if you look at the momentum setups, or you look at what we did on Thursday, Friday, such a move was definitely anticipated. We've been talking about a pullback towards the 200-day moving average, or the September breakout levels at 55.50 last year, and the 200-day moving average, which is at 56. That's the range where you would want this market to go, and then decide as to, do you want to short this market just below the 200-day moving average, or if the market
has... 200-day now stands at what, 56?
The 200 is around 5600 levels right now.
Okay.
So once that is crossed, I think then the market can add extra legs. But till that is not happening, you would still be circumspect on this rally, and you'll see as to how volumes or how stocks are behaving. So unless until you are very clear, as I said last time also when we met, that you are trading with small positions, you are trading with a 30-40% of your capital right now, and wanting to trade long all the way. Since 54 has not been broken, and 54 has been the monthly mean this time, and today being the last day of that close, you are fairly decently above that level, 2% above that level. And as long as the monthly mean in a bull market is not broken, you don't see incremental sell-offs, so you don't see those large sell-offs happening. So you break 54, and then only probably I'll go and short this market. As long as that's not happening on a closing basis, you would want to be more on the buy side with a small position.
You know, you can argue completely the other way around as well. If you sold on every rally, you'd still, and if you had the holding power and the stomach to do that, you'd probably still make money in this market. Essentially, we've been in a range, so you sell at the, you buy at the lower end or sell at the top end, and that range has been about, on the higher end has been about 57 to 5900.
Yeah, well, if you look at absolute near term, then the range has been that. But if you look as to what we have done over the last 6 months, we have a top at 60 to 38, and we have a low at 51.77. So that's a huge range. That's a huge range, and definitely that was a pure directional move that happened. Now we are just wanting to retrace and correct that, and that is where you've seen all this noise and this sideways kind of movement that we've started to have. But even the fall from 5900 was a decent trending move, and anybody who's part of that would have definitely made his 5, 6, 7% on the index and slightly more on the stocks. But as I said last time as well, that right now you are at a flux. You are at a situation which is very fluid and changing day by day. You are absolutely on long-term supports, where the market has been whipsawing around 5400 levels. So that's absolute long-term supports, and any lower from here would definitely tip the scales in favor of bears, and then that sell-off also could be slightly, that could be slightly more in terms of percentage terms. You could go down another 10% on the index, and that would be painful, because till now I think market on the downside has not given you that much of pain. Right from, if you look at 2009, the parallel channel, if you can, I can show you this chart. If you see that, if you see the 2009-2010 green channel, that was the parallel range. It was a 650 odd point range on the index. And that range has behaved beautifully till now. We had just one minor break in September. That was a 1 month kind of a break, which was here. This was the period that was kind of a false breakout, and since we have re-entered, the 5944 top is also close by to the upper end of the channel. So essentially, as you were saying, that we are in a 650 odd point range with one breakout thrown in between.
Above it, yeah.
So as long as we are within this range, towards the lower end of this range, you would always want your risk rewards will be in the favor of buys, and on the higher end of this range, your risk rewards will be in favor of sell. So currently that range is far off. So we are not talking about that. Right now the range, the upper end is around 6050 and the lower end is around 5300. Since we are closer to 5300 and we have retraced from here, you would be looking in for more buy trades, because the risk rewards are favoring that. And the blue trend line that I have drawn is through the 2008 and 2009 lows. That trend line has been whipsawed and marginally broken. So that is the only gray area. That trend line has been whipsawed and marginally broken, but in today's trade we have come back right above that. So that's heartening in terms of, even though that you broke the 200-day moving average, the 2-year trend line as of now with a minor whipsaw of 3 days is still intact. Today we are closing above that. So all these things have to be kept in mind, and there's no point being incrementally bearish from current levels unless until, as I said.
But as is there any point being incrementally bullish as well? Because as you said, you yourself are saying that we are just about holding to very long-term support areas. That's not a sign of strength in any market, is it?
No, that is what. This is just a time correction that we are going through. The next chart probably explains the same theory that we have discussed a couple of times on the show. These are typically these are standard deviation bands. These are Bollinger bands where I have done a plus 2 sigma and a minus 2 sigma on the band. And whenever a bull market, I have compared this with 2001 to when we started the bull market from the lower end of that range, which was a first vertical move. After that, if you see 7 times over the next 5 years, we took support on the monthly mean, which is the middle band, and kept on egging higher irrespective of whatever sentiments were prevailing at that point in time.
Sure.
And this I can compare to 2004-2005 period where we had a similar kind of 7 to 8 months sideways going towards the mean. And this time also we have had this seven odd months which have been sideways and they have just tested the mean. One test was in Feb, which was the level I was looking at, but since we have failed to get an incremental push higher and not been able to go into a new high, you are seeing that we are struggling again at that level. So if the odds in February that were at 90-10 in favor of you taking a new high, this time the odds are reduced to say a 70-30 kinds. But still, as I said, the odds continue to favor longs as far as the long-term setups are concerned. Unless until you break this, you are not going any lower from here. You might spend another 3-6 months. I am not saying that. You might spend another 3 to 6 months here. But net, as long as you are not breaking those levels, or as a matter of fact, to be on the safer side, you are not breaking that green channel that we saw, which is around 53.30 right now. As long as you are not doing that, incrementally you would not see great amount of selling coming into the market.
Are a lot of people watching these charts, these setups? What's your sense?
Bollinger bands, yes, people do look at how many people look it as a trend indicator. I'm not aware, but I am one of them. And yes, the 52-week channel, the previous channel, I think everybody has it, that everybody has on the chart. So as it is, you are seeing that that's working as of now. So if you say that channel is a consensus, more or less it's working as of now. So till that consensus is broken, you have to tip the scale. You don't have incremental selling which can tip the scale, and you also don't have that amount of buying which can take you out of that channel. So both the things are not happening, and you have to wait for either of them to take a trade with 100% of your capital. Right now you're just trading 30-40% of your capital, whichever side you are.
Sarvendra, just a bit about the momentum which has been lacking in the market. It's just a function of, it's a sideways market which is constantly being whipsawing people one way and the other. So this interest is kind of ebbing down and down.
Yes, it's a function of participation. The more the market goes sideways, the lesser the participation becomes.
So another 6 months we should have, it should be, things should get, I don't know how to put it, worse, right? In terms of participation at least.
No, the kind of setups, those people will be coming out time and again and say with a 15-day gap, and you will see some activity the way we are seeing it today. So today I think people have been shaken out of their comfort zones, and some people are wanting to trade, and you are seeing those volumes coming up, and you are seeing that momentum picking up. But yes, as I said, till we remain in this range, this 600 odd point range, I don't see exponential volume expansion in terms of where you go 1.5x or 2x of your daily volumes, which probably we did in September when we hit almost 220 odd thousand crores in the FNO. So to see those kinds of volumes, you will have to get out of this range. So it could be either 46 or 64. Either side you have to take out this range so that you get those new levels and people want to act. So since I think for the last 2 years, if you look at a weighted average on the Nifty, I think we are just around 5,500 levels. So for the last 24 months, someone holding, say, a basket of 50 stocks has not made a great deal of money unless until he has traded the right stocks and traded all the moves. So this is not a buy-hold market, and not for 1 month, 2 months. It's for the last 24 months. Unless until you had mid-caps or high beta, which performed briefly in September, October, and then all of them are almost back to where they started from. So someone just purely buy and holding, I don't see that. I can't see how he would have made on a well-diversified 50 stock portfolio. You would not made it too much of money.
Since the sell-off in November, but most of the action or whatever moves we've had so far from 5177 to 5900, it's largely been large caps, right? Mid caps are pretty much relegated to to nowhere.
Absolutely.
Nothing.
From October, once we have corrected from the October highs, October-November highs, we've seen that mid-caps have languished, and it's been like one or two of them moving at one point in time, but the whole basket is now no longer moving. And
nothing.
And you are just seeing some pockets of outperformance here and there. And large caps would definitely drive into a new leg up. If at all you have to see that confidence building back, you would have to make some moves in the large caps. You'll have to make some money there, so that money can then trade those so-called small stocks or penny stocks or mid caps. So till that happens, till you don't make your money in Reliance, till you don't make your money in SBI, where we have seen market caps coming down by crores, thousands of crores, till you don't see all that coming back, probably you will not see action shifting to mid caps very soon.
You've got a MSCI World Index chart as well. Let's just pull that up and just run us through how the global setup is looking. I think we've got that up on the screen. Yeah.
So yeah, almost absolutely similar. There we had a 2-year kind of, on the Nifty we had a 2-year kind of a trend line. That was a fairly longer trend line. This is approximately 52 weeks long. And the trend, the entire setup remains same, where daily momentum has reacted from 52-week oversold levels, and we are wanting to inch slightly higher. So initially, if I have to put initial targets, I would put, say, a 5 to 7% higher targets on the MSCI World Index, and that would be somewhere around 360, 365 levels on that index. But the problem is that when we go and reach those levels in this leg, we would have been started to form a slightly bearish setup on prices, and there you could see larger corrections or larger retracements coming in at that point in time. So till that happens, I think we are still there, and we could still do that 5 to 7% incremental upsides on world markets. Since this is a basket of world markets, you could do that 5, 6, 7% on Dow, DAX, CAC, FTSE, Nifty, and other Asian markets as well. So definitely within this move, if someone wants to trade, there are 5 to 7% targets on the upside to be traded. Stocks could give you 10, 12% as well, or slightly more also.
Right.
So just trade this market. This is not a buy and hold market.
Okay. So what are you doing, and what are you telling your clients?
Just as we right now discussed, we are sticking to large caps. We are sticking to Reliance's, SBI's, Axis Bank,
When you say sticking to, so you
on the trading side, we are sticking our bets here. So we like SBI with a target of, say, 24,100. We like Reliance with a target of somewhere around 1,030, 1,050. We like Axis. We like Ranbaxy. So these are the stocks that we continue to like. And as I said, you would look for targets of anywhere between 5 to 7% initially. And if at all you feel at that point in time that the 200 moving average, by the time these targets are met and Nifty started to inch upwards of the 200 exponential moving average, you might just hold the positions with a stop at the 200 moving average and just want to ride the another, say, 100, 200 points, whatever Nifty has to do after that. But definitely you can ride this move at least till those levels.
These are, so an SBI after the correction, Reliance at whatever it is right now, 900 or something. Is this because they've been in let's say RIL, for example, has been in a well-established range for the last 2.5 years?
Absolutely. Reliance is a stock which has been a rank underperformer, but it has given you your trading moves. It has given moves from 880 to 1050, 1100, at least 4-5 times. So if someone was trading that range itself, he would have made his 20-30% per annum in Reliance itself trading, just purely trading. And as I said, this time also we have reacted from the close to 880 levels on Reliance. So you would put your targets at 1030, 1050.
Seems too simple, right? If you just look at it. If this is going to work, then
in hindsight, yes, it looks very, very simple. In hindsight, it looks very, very simple, but you have to go and put on your trades when you feel comfortable.
Right.
So as I said, we put a couple of trades when it was around 5200 levels earlier, and then we wanted to put some trades around 5400, which we have already started to put now. Okay. So one by one you put your trades and then see how the market behaves.
Right. What about our SBI? State Bank of India, what's the story there?
Post results, what I believe is that we have seen a very, very climactic kind of sell-off, which had huge volumes, right? So I'm not saying that the stock has reversed totally on the upside, but after such a climactic sell-off, you get your usual 30 to 40% kind of retracements or pullbacks, so as to say. So if I have to do that 40% retracement, I will do 2400 or thereabouts on the stock. So pretty huge volumes on that sell-off. So, and there is always an element of speculation in that. So those shorts, when they get covered, will give you that 30 to 40% pullbacks on that stock. So just from the trading perspective, that stock looks definitely good. Even Axis, as I said, on the banking space, Axis looks good.
Talking about big sell-offs, you've had quite a few in large caps. And since you're sticking to large caps, you had a Tata Motors, you had an M&M which sold off big time, you had an Infosys which sold off big time, never came back. You've had a couple of those, right? This time around.
Yes, but the kind of levels from where probably Infosys, from the patterns that Infosys has sold off are slightly different to what SBI has done. SBI was a performer till then.
Sure.
And it was a total outperformer till then. So, as I said, if you want to kill an elephant, it takes time.
Right.
So within that, whenever it wants to breathe, you want to be on that side. And this is a purely high risk trade in terms of it's a short-term momentum trade, and you take it for 5-6 sessions, it matures fine. If does not, then also you exit. So by next week, if you are not getting those targets in these stocks, you are definitely wanting to exit. You are not
SBI around 2400 by
absolutely
by next week. Okay.
So in the next 6-7 sessions, if you are not getting Reliance at say 1000, 1030, you are wanting to exit the position as in without putting your stop losses also on the table.
Right. Okay.
So this is a 7 to 10 day view. Either you get your targets or you exit, and then decide what you want to do. As I said, we are forming slightly negative setups on global markets. We are forming slightly bullish setups on the DXY. So as and when they mature and they start to reverse will be the time where we will be able to call them. So we are not calling that the DXY is going to bottom out say around 73, but we feel that this time around when it goes to 73, this could be the final bottom for the DXY for the next 3 to 6 months at least. And it could go as high as 78, 80.
We had somebody who was calling DXY at 91.
Absolutely. If that is possible, why not? If you cross the 200-day moving average, which is around 78, 80 levels, if it crosses that, so you have to take step by step. So the first stepping stone is the 200-day moving average for the larger trend to reverse.
Okay. And G. Chokalingam, Executive Director and CIO at Centrum Wealth Management is with us. Salil Sharma, partner Kapoor Sharma and Company. Sarvendra is with us as well. Afternoon. Prashant here. Choka, let me start by asking you, IVRCL, Nagarjuna Construction, all your other road construction companies, any hope for any of them?
Maybe in the very long term, but in the short term, we are not overweight on this particular sector, considering the interest rate, hike in the recent times. We are not very optimistic about this segment in the short to medium term.
Do you, would you at some point look at these stocks just because they lie in that extreme zone of underperformance? The extreme of the extreme. Stocks like IVRCL, Nagarjuna, you got lots of them. Same space though.
Yeah, there are two things to look at. One is the price point. Of course, once it becomes attractive, one can look at it. But the fact is that according to us, the pain is still left for these players in the country. So we believe that the next 2 quarters, the pain would continue. So probably you may get these stocks a little more cheaper or significantly cheaper in the next 2 quarters.
Right. Whenever I've chatted with you, Choka, you've always highlighted your liking for some agri names, agricultural businesses. Some seed companies, some crop protection companies, etc. We had a deal today, Coromandel International basically, buying 42% in a smaller company, much smaller company, Sabero Organics. Have you looked at the deal, what it does for the sector, if anything?
Yeah, I can tell you that this Murugappa Group, which owns Coromandel, has been extremely efficient in acquiring the companies and turning around them. In my experience of last 21 years, I have not seen any failure from Murugappa Group in any of their acquisitions, because the whole group has grown only through acquisitions. So I am sure they would have done a lot of calculations. They are very smart, and definitely the group would be benefited. Whatever price they paid, I am sure there won't be any loss for the group, because the history has proved again and again in the last 20 years. And since tactically Coromandel has run up a lot in the last 16 to 18 months, I would rather play on this Coromandel as well as on agri theme through EID Parry, which is a holding company of Coromandel. EID Parry holds about 62% stake in Coromandel. And if you look at enterprise value of EID Parry, which is around 4,500 crore, whereas its investments in Coromandel alone worth about 5,500 crore. And also it's the largest sugar producer in southern India. So it is better to play through EID Parry, and also we firmly believe that sugar cycle would turn around in the next crushing season.
Salil, how would you rate today's market action The problem has been that there have been very few instances where the market has followed through very properly the next day after big moves like these.
Yeah, Prashant, I think this one looks more sustainable because it was after consolidating in that 5460 5500. Yesterday it tried to give a breakout above 5500, but that didn't happen and it closed lower, and that was good in a way because yesterday the volumes were pathetic, overall below 70,000 crores, and any breakout in those kind of volumes is very unsustainable. So now today I hope we'll have volumes in excess of at least 1 lakh crores, and that would be more sustainable. And the other reason I say so is that if we go 1 month back, we were kind of trading in this 5480 5600 level, and then we broke this range and went below. But that bearish pattern didn't play out much, and then we are back again in that same trading range. So generally when this kind of thing happens, when a bearish pattern fails, then we do get a bullish up move because a lot of shorts get trapped in the process. And I think that's what's happened this time also. So, and the another thing is that our old favorite Reliance has finally seems to have woken up to get the leadership here. So hopefully that sustains the move upward, so it can take Nifty along with it.
We spoke about EID Parry. He expects the stock to give about a 30% return in 6 months to a year. He's got Tide Water Oil coming in next, and then he's got a call on Sheshasai Paper and Boards. Choka, you want to talk about those two, Tide Water Oil and Sheshasai?
Yeah. Basically, before going into these two stocks, I just want to tell you that the mid-cap stocks are going to do very well in the next 6 to 12 months. That's our official view. Now, the Tide Water Oil, we have been a little cautious last 2 months because of firmness in the oil price. But despite spike in the oil price, the Tide Water Oil has come out with a very impressive results for Q4. The net profit has grown by 64%. On yearly basis, for full year, the profit growth has been around 11% because they had some squeeze on margin in the December quarter. Now, this company is into lubricant, branded lubricants. It's a thematic play in terms of growing automobile population. We expect the stock to do extremely well because it's a zero debt company, and also it's a potential divestment candidate. And even if you assume a modest growth of 11-12% per annum in the profit, it's quoting at less than 8 PE on 1 year forward earnings. The last idea is Sheshasai Paper. It's among the most efficient paper producing company in the country. It's available at just a 4 PE on 011 earnings itself. And if you assume even 10% earning growth for next 2 years, you are getting the stock less than 3 PE. And the holding of shareholding in this company is highly fragmented. There are about 65 individuals and various entities hold together 42% stake in this company. After seeing AP Paper takeover, we believe that there will be a few more acquisition stories in the paper industry, and this we believe that is a likely candidate, considering the fact that the valuations are very cheap and fragmented holding, and also it has gone for acquisition of one paper mill at a very throwaway cost, and the whole enterprise value is available at around 35,000 rupees per ton as compared to 1 lakh rupees paid for AP Paper acquisition by US paper company.
No, but that that valuation you can juxtapose on any paper company, any listed paper company, and you would always come out saying that most paper companies are undervalued. But is that the right way to look at it, that deal which happened?
Yeah, you are right. You are right. What one has to see is the shareholding pattern. Here what has happened is that there are, as I said, 65 individuals entities, we presume, which cut across several families or different investor groups who hold together 42%. So highly the fragmented nature of equity holding gives us a comfort, and also Tamil Nadu government has got about 11-12% stake, a little more than 12% stake, not as a promoter, as an investor, as a strategic investor. Now we all know the kind of welfare schemes which were promised by the ruling party. So there is a possibility of the government also showing interest in divesting the stake. So this has given us the confidence.
Okay. Choka, just on that same point, you have a whole variety of companies cutting across industries which are available at 3 times, 4 times price to earnings multiple. You know, I was noticing numbers on a company called Lumax Auto Industries. Terrific set of numbers. The stock hasn't budged. Nothing available at you know, pretty cheap multiples compared to the sector it trades in. The basic point is probably interest is not there right now for these kind of names. So I guess that's pretty much it right now, right?
Yeah, see, I would agree with you that interest is not there. I mean, in fact, sometimes my friends used to call me a man of boring stocks. You know, in this space you get bored. You know, it tests your nerves and passions. But let me tell you that if you stick to good management companies and good business models and very good operating margin companies and some growth prospect is there, even if you go wrong in 2, 3 out of 10. You end up with making a lot of wealth. I mean, that has been my experience in the last 20 years. So, as you mentioned, you talked about, auto component, but there is a lot of pessimism now on the sector as a whole, for the reasons well known that the material cost for auto companies have gone up and the interest rate has gone up. So, probably, not many people have got a very optimistic outlook on, on entire auto space. So, otherwise, you are right, but the fact is that ultimately you make wealth only by buying very attractive stocks at attractive valuations. That has been proved again and again. But just to take a digression, in economics, what we call Giffen paradox. People lose confidence when things become cheaper. Only when price goes up, the demand goes up. That's why it's called Giffen paradox. Unfortunately, in this country, a sort of a Giffen paradox plays out in the stock market. But all the smart investors, they don't follow this Giffen paradox. Finally, they end up making a lot of wealth in the market.
Universal phenomena, not just here. Sarvendra, what else? What else are you watching out for in this market? You told me just in the break that today's closing would give you a lot more clues in terms of where we go from here, right?
Yes, since we've moved up and we've gained some momentum, and if you look at daily indicators, they have kind of moved up from historically oversold levels, which were the trading bands for the lower end of a trading band for say a 52-week kind of a time frame. So once you do something like this and you pull back towards zero, which is the neutral line, so the way you pull back towards zero kind of tells you as to will this move last or not. So looking at what we have done today, I have not seen the kind of volumes that we have done or till I see the closing files, but the move looks good. The move looks solid because we have seen participation from large caps coming, and we have also seen that some other stocks have also performed. So net, if we are able to move beyond the 200-day moving average, this market could add some more legs. And as I said, with the kind of close that we have closed fairly, what you call above the monthly mean, some 2% above that level, 2.5% above that level, which is itself good because you have a lower shadow on the monthly mean, which tells you that within a mean reversion setup, now prices are wanting to revert. So towards the higher end of that band. So if I go back to the 2 sigma, which means that level is again upwards of 6,000. But as I said, to call that, you would want the 200-day moving average to be taken out.
Got a chart on Punj Lloyd, Sarvendra?
Yes, absolutely.
How's that been looking? Does today's big 18% move do anything for Punj Lloyd and investors in Punj Lloyd from a longer term perspective?
See, long term, if you look at the trend, the stock is fairly still not reversed and still beaten down there. So yes, with this kind of a reversal and with the kind of monthly formation that I can see as of now, with the part that I had during the day, you would at least give it a, from current levels, you will add more, you can give it a chance to do another 10 to 15% on the upside. So anybody wants to trade this stock, definitely this stock would be a trading pick.
Would be a trading pick.
Yeah, this would be a trading pick since, as I said, the longer term setups are still inverted, and you still, as you can see here, if you have to draw a trend line there, you would probably see that this entire phase is trending down. So you would want a breakout of this.
This is a quarterly chart?
This for Punj Lloyd is a daily chart.
This is a daily chart. Okay.
I just wanted to show that the trend is down. So if I have to just draw a trend line there, so you see that the trend line, the gradient remains, for the trend line, the broad gradient remains down. So unless until you are probably going beyond this high at say around 75, 76 levels, till that point in time you would not say that you have the first higher top. You don't have that. You have all a series of lower top, lower bottoms. But yes, with the purely with the kind of monthly close that we have had today and the monthly formation, if I can show you there, the last two bars have both been kind of hammers that we call technically, and both are bullish formations. So there could be a chance that with this low in mind, you could trade a very decent bounce on Punj Lloyd going all the way back till say 85, 90 levels. So that definitely remains a possibility on that.
The last one is a red candle. It's a
I have got a part data there. So
right. Okay.
my data is
this is a monthly chart.
This
right.
is a monthly
okay,
chart.
Okay, got that.
The formation does not change with
Sure.
the color of the bar. It
Sure.
remains a hammer because
Sure.
it's classically looking like a hammer formation.
Okay.
So such formations are usually signified with medium-term bottoms. So if not a final bottom, it's a good trading bottom on Punj Lloyd.
All right, got that. That's Punj Lloyd view coming in there. Sarvendra, thanks very much for your time. Good talking to you as always. Salil, good talking to you. Thanks very much for coming on board. Choka, thanks as always.